What's going on, everybody? Welcome to a Capital Hungry Scalper Setup Series, #1 episode in the series. Basically, once or twice a week for the free community, I'm going to be doing a very short and sweet video of some potential scalp trade idea setups across main trading instruments that we look at just for the next couple of coming sessions based on technicals, fundamentals, sentiment, and so forth. So let's jump right into it. In terms of economic data, we do have some business climate manufacturing report for France overnight. The main important data is the Euro Central Bank interest rate decision, which is at 8:15 a.m. Eastern, expecting a short-term hawkish impact on Euro, potentially leading to some short-term upside on Euro, but that's still well away at 8:15 a.m. tomorrow. Then we have some initial jobless claims and Philly Fed business index reporting for the US at 8:30 a.m. Eastern, after the interest rate decision from ECB. So keep that in mind for economic data we have on the docket, ECB speakers, and some Fed speakers later in the afternoon. When we're looking at gold, the higher timeframes have, of course, been very, very bearish. We've just been having these phases of liquidity grabs and squeezes and accumulation of sell-side orders before continuing down in the overall bear structure as dollar domination has held the most weight. At the current moment, you can see we are consolidating between these significant lows and intraday highs, creating this range and accumulation of orders roughly from 1700 to 1720, a very large intraday range, which is very common to see on gold. We can see a lot of buyers' exhaustion and more sell-side liquidity being generated from the 1720s price point of interest, and bearish price action bringing us back to these lows. At the end of the day, we would still need to be trading below 1700s to see any type of continuation sells. And we have to keep in mind some of the economic data tomorrow. If the US economic data is optimistic and we're trading below 1698s, especially when you're coming here and looking at the lower time frame, you can see on your lower time frame charts, just because we're having aggressive downside to these ranges at 1700s to 1702s, doesn't necessarily mean we are instantly going to break. We still have US dollar exhausting from the highs in short-term pullback structure. We still have some US economic data tomorrow, and we still have markets relatively softer, just ranging across the board. Euro USD ranging, GBP USD ranging, GJ ranging as well on its intraday timeframes. So volume and volatility has been lower and slower, and we would need clean-cut confirms for any type of continuation sales on gold. Bringing that down to the lower timeframes, we've seen a lot of aggressive reaction from the 1700s to 1703 area. So we don't want to just start jumping the gun, looking for sells unless we have the proper confirmations. The proper confirmations on the intraday timeframes here would of course still be validating the overall bearish market structure. Validating more sell side liquidity has been generated in these areas, which that validation would come with intraday candle closures below these previous lows and also lower time frame breaks below the 1700s. Otherwise, do not rush the sell plays, and you have to be patient, as we can still just end up having some aggressive wicks and overall still playing in this range. With that being said, to keep it smart and to keep it efficient, as we understand we're in a secondary phase of the market, from about this price sensitivity area would be a no trade zone. I would only be looking for any safer gold buys really above the 1712s and 1715s. So what this would look like when you're bringing it down to the lower time frame is still having this succession of lower time frame bearish market structure being respected, having larger bearish impulsive moves, and just these minor corrective consolidation phases. And even if we get a pullback to the 1705s or 1707s, overall having another impulsive leg down to the 1698s and 1700s, getting an intraday candle close below those previous lows, and then with the continuations below 1700s and 1698s, would give you very, very smooth and steady sell scalps. If you also want to play this structure and potential retest in the range, that would be a higher risk sell area. But on the lower time frame, we can see sellers consistently starting to print lower lows as gold is still bearish on the higher time frames, rejecting a very strong sell side liquidity zone at the 1715s, where if we have these sequence of events take place, these are very nice, safe sell areas to take advantage of. Otherwise, when we're diving into the lower time frame and looking at some of these key price points of interest, to really see any chance of jumping back into a buyer bias, you would need exhaustion and failure to break these lows, correction of this downside move, and gold really trading back above 1707s and 1708 price handle here, clearing above a lot of this price sensitivity and noise on the lower time frame, validating not enough sell side liquidity to break lower, and also correcting that downside move. Okay, so intraday timeframes on gold is bearish. If we see dollar strength back into the table, if we see this type of sequence of events occur, or overall we don't correct this downside move, even with a deeper price grab and liquidity grab, breaking into new lows and having an intraday candle close, then diving into the lower time frame of the sells from 1700 and below 1698, after that pullback to grab some more sell side liquidity, or just starting to instantly break lower, is what I would personally be looking to take advantage of, as long as we don't trade back above the 1709 and 1708 handle. GBPJPY. GBPJPY intraday timeframes are still very bullish. We want to keep in mind the Bank of Japan interest rate decision, the Bank of England interest rate decision, and more economic data to come. As volume and volatility has been lower and slower, you can see as buyers have been printing these significant higher highs, you also have very aggressive correlated pullback phases that can occur in aggressive fashion, or even if it's in slow and corrective fashion. Here you had more of a consolidation. Now, if we continue to trade below these previous intraday highs at 166, there is the potential for deeper downside pullback plays on the intraday timeframes to even come revisit 164.5, 164.8, and so forth. So what we're currently seeing is buyers exhausting at a new intraday high, just seeing potential of a pullback as this upside move is getting equally corrected here. Japanese yen individually having a short-term pullback from its technical lows, seeing very large rejection candles, where from a technical perspective, if we have buyers fail to break back above roughly 166.8 here, previous intraday highs, this shows a lot of exhaustion by buyers exiting positions and potentially entering another aggressive pullback in corrective phase, which can easily come down to 164.5 and 165. When you're bringing this information together on the lower time frame, you can also see that from these significant highs printed by buyers and the revisitation of those highs, you're getting some stronger pullback structure starting to form accordingly. You can also see on the 1 minute time frame exactly where you're getting buyer rejection, buyers failing to break higher, and breaking below significant price points of interest as well. So when you're looking at these very key price points of interest, it tells you a lot of information about the orders entering and exiting the market. What we're seeing is there's not enough buy side liquidity to break above 166.2 ppl. What we can also identify is we had aggressive pullback phases to this liquidity zone on the lower time frame around 165.7 and still did not have enough buy side order flow to break higher. Deeper pullback phases have still been relatively short-lived, where again, if we're trading below 165.5 and starting to trade below 165.2, we can see very aggressive pullback phases on the lower time frame to retest better buy zones of interest. For example, coming to at least potentially retest 164.8, or even potentially 164.5 as stated on the intraday timeframes. So those areas at 164.8 would be potential short-term sells to those areas, and then looking for better risk versus reward buys if we start to show any type of rejection as seen here on the lower time frame, starting to create an order block or support, an accumulation of orders, starting to see some double bottoms or triple bottoms at an area, more supports being created, right? At the current moment, we're starting to see a bit more of the inverse, we're starting to see a resistance formed where buyers don't have enough more buy side liquidity to break higher. Sellers starting to print these intraday lower lows. The upside plays not breaking this corrective structure or correcting these downside moves. So with that being said, in terms of scalp trade ideas, pullbacks to retest structure, then coming back below 165.5 would be high risk, high reward sells. Breaking below 165.2, breaking below 165 would be your safer sells. And this is just for the, remember this scalping series is just for the coming sessions, potentially Asia and London and New York, and just very short-lived trades. For example, if you take those gold sells and we break below the 1700s, I'm not expecting you to hold for 100 pips, but you can easily get 20, 30, 40 pip squeeze. On GJ here, if you get some of these movements, I'm at least expecting these PPL to PPL movements for 20, 30 pips, a scalper's range to take advantage of and play, right? With the red boxes being the sell areas following that price path, and 164.8 and 164.5, I would start to look for buys here based on the intraday timeframes. Otherwise, if GJ just pushes up, breaks this corrective structure, we don't follow this pathway of price and get a rejection and break back below 0.500, where this would be your more high risk sell scalp. Medium risk and safer risk below 165. If we do not get the confirmations of these initial rejections, I would just only be looking for safer buys with break and retest above 0.800 or breakout, breaks above 166. But if we start to break above 166, you would need to validate another 20 pips up still if you have enough buy side liquidity to break above those intraday high price points of interest, right? So that's a very key area to look at. Dollar pairs, short term, dollar is in pullback structure from its intraday highs as we're having buyers liquidate positions and very, very normal pullback. When you're looking at dollar, if it doesn't trade back above 107.3 here, and we start to turn bearish or break back below 106.5, this bearish bias on dollar will also correlate and show less demand in dollar, equaling more demand in the US equity markets, and also potential for bullish pullbacks on GBPUSD, EURUSD, and a bearish downside move on USDCAD. So how this would be highlighted when you're dropping down to GBPUSD, as you can see at the current moment, we're having a pullback from lows, but we're still rejecting these key price points of interest. I would only on the lower time frame now, when we're looking at the structure that is forming in terms of scalp ideas, we can mark out this key price point of interest still here. If dollar stays flat, right? Breaks lows on dollar, this is talking about dollar individually, or stays below 107.3. If we come down to this lower time frame price sensitivity area that took us into these intraday higher highs, in this area, I would be looking for a double bottom, lower time frame support, and potential higher risk pullback buys on GBPUSD. I would also look for the pullback buys above 1.1985 key level in this fashion. And the safer buys would be above 1.203. Otherwise, this area here in pink is a no trade zone. And I would only be jumping back into higher time frame GBPUSD sells or any type of scalp sells if we break below 1.19 key level in intraday price point of interest. This would mean that the higher risk buy scalp area would be invalidated. And we would only have the safe sells below 1.19 key level marked in red, looking to scalp that down if dollar strength and dollar bulls come back to the table and we have an individual reason for GBP weakness. Similar type of idea on Euro USD at the current moment. You can see we still haven't fully corrected this impulsive upside move. We still have dollar in that indecision state. I could only safely look for back into Euro USD sells if either one, we break and cancel out this bullish engulfing move and have dollar buyers back into the scene, or two, if we had potentially a double top in this area occur and more sell side liquidity generated in this area. On the intraday timeframes, you can mark out this structure starting to form on the lower time frame as well, which we're going to do here accordingly. But the one thing we have to be very cautious about on any EU scalps is the Euro Central Bank interest rate decision in the morning. So I would personally only really be looking for Euro USD sells. Didn't mean to move that. Below 1.12, sorry. And we would need dollar strength back to the table. We would need the ECB sentiment to be dovish and not hold any hawkish weight or impact in the morning. Otherwise, if we reject the key level again, come back above 1.0800, or even have the hawkish ECB tone potentially break above 1.026, we do have a lot of potential for pullback upside if dollar stays weak in the short term and we have a hawkish ECB sentiment giving signals that more rate hikes to come, with this being a potential price setup for that ECB move. Otherwise, here in pink would be a no trade zone, and I would only take any sell scalps roughly below 1.012 here. And we would need dollar strength back into the table and a dovish and a break below 1.012 to even think about taking advantage of that. Otherwise, if you watch the market update webinar, you would understand that we're in an indecision area on the dollar where we're having buyers exit positions, pullback structure occur. We're waiting for a lot of economic data. We can even see equity markets ranging as well today, gold ranging, dollar pairs ranging, USDCAD ranging here as well. Now, if USDCAD breaks below 1.283, dollar softness stays prominent, and we have any rebound in crude oil in terms of that market sentiment correlation, then I can't really see UCAD buys coming back to the table, especially if you understand how this pair behaves on its intraday timeframes. If we continue to trade below these previous significant highs, and every time you have buyers print these higher highs, you have these very aggressive pullback phases that occur as well, right? So if we have that short-term pullback phase in the dollar, if a lot of the Fed sentiment and rate hike rumors, have been priced in, I would still be diving down into the lower time frame and looking for any rejection sells from 294, breaks back below these current low sells, and breaks below 283 sells. When you're looking at the lower time frame, the downside move has still been seeing sellers print significant intraday lower lows. You have these aggressive pullback phases, but the majority of the time they get faded out. Meaning if we have a bit of consolidation in a pullback phase occur, even if it comes to this price sensitivity area of interest, it would still be maintaining the integrity of lower time frame bearish price action and of course short-term dollar weakness. So retest in this area or breaks below this zone after the retest and breaks below 283 would still be sell side bias, with only buys above 298 and higher time frame dollar bulls back to the table. US 30 is ranging, but at the current moment, volatility index is still bearish. Dollar is still in this corrective bearish pullback structure that where if it fails to break above 107.3, can still easily come down to 105.5 before seeing more buyers back in the market. Going to be dependent on some of the US economic data tomorrow as well. But as long as volatility index is flat and not showing major short selling, global equity markets are finding a bit of a support in floor. We can see a short-term bear market rally occur. On US 30, if we have any pullbacks to 31,500, holds of 31,700, breaks above 31,900, I would still be looking for buys, especially when we zoom into the lower time frames on the 1 minute and understand the structure that is in play, which is very easy to see here. So far, we've had some more aggressive upside moves, minimal pullbacks with buy-side liquidity generated in better areas, or even retesting this previous significant price point would still be a significant buy zone. I would only be looking for sells below 31,150. Now remember, these are intraday and lower time frame scalp setups with those confirmations, confluences of using correlations, your intraday price action, and diving down to the lower time frame. Potential setups for the next couple of sessions. Don't overtrade, don't over leverage, continue to do your own due diligence and analysis, stay adaptive and stay smart. And this is just a quick, short and brief webinar for people's attention spans.